Qualifying incomes. So I get a lot of questions about what incomes can I utilize to qualify for a mortgage. Um, it all depends, right? So of course we can have the normal W-2 income where you work for your employer and they pay you on a W-2. They pay you a paycheck. The paycheck will allow for them to take out taxes and any other type of expenses. That's one income you can use, W-2 income. Another income you can utilize is 1099 income. 1099 income is where you're typically a independent contractor for a company. They pay you a check, but they don't take out taxes or any other expenses from your income. So in this case, you're considered a independent contractor as well as in the eyes of the tax company as and the IRS, as well as us as lenders, you're self-employed, right? You at the end of the year, each company that you contract from, you receive a 1099. That income is usable. We can qualify you using that income, but there's a specific way it has to be done. So it has to be carried on your tax returns. So we need to have at least a 2-year history of being self-employed or 1099, right? And what we do is when you do your taxes, you need to have a conversation with your tax preparer to let them know not to write off all of your expenses. If they write off all of your expenses, because remember, you're not being taxed throughout the year, you're paying your taxes at the end of the year, then your tax preparer will do their job and mitigate some of your tax risks by writing off a lot of expenses or things incurred by the business. That's great for you for not having a tax bill. However, then you don't show much income. So what we use is AGI, adjusted gross income. We look at what's on there depending on the type of company you have or what it says your profit is from your profit and loss statement, from your on the profit and loss statement from your tax return, Schedule C. We look at that income and we average it. Let's take example 2021 and 2022. We average those 2 years together and we divide it by 24 months. That gives us your monthly income. Now, we also have to have something called a profit and loss statement. It's a year-to-date profit and loss statement. The year-to-date profit and loss statement would go from the beginning of the year, let's say 1/1 of whatever year it is, until the current date. And whatever that is, that income needs to be equivalent or higher than your 2-year average in order for us to utilize that income. Now, if you're self-employed, let's say you're a truck driver and you get paid by the load and you're the owner operator, your income is looked at the same way as someone as a 1099. You don't have taxes taken out throughout the year. You're getting paid from whoever you deliver the load to, the broker or the company you deliver the load to, and they pay you however. What you have to do is keep track of your income throughout the year. Now, in some cases, typically, if you work for this company and continue to broker loads from them, they will give you a printout of your income. But as a self-employed borrower, you need to carry your own income and expenses on your taxes. We look at those and we do a 2-year average. So we look at the average of 2021 and 2022, and we again get the profit and loss statement. Now, with the profit and loss statement, it also has to be equivalent or more than what your 2-year average is, or we have to go with the conservative number. So if you're earning less money in 2023 than you were in 21 or 22, that's not saying that you don't qualify. It's saying your income has dropped and you need to we need to utilize the more conservative income. Now, we've got the W-2 out of the way. we've got the 1099, we've got the self-employed borrowers, where you're saying, Kevin, what other incomes can we utilize? You can utilize Social Security income. As long as your Social Security income is likely to continue over the course of 3 years, we can utilize that income. Typically, Social Security income is non-taxable, so we can use that income. And we can also use that income if you get Social Security for your kids or for a spouse or a loved one. If that comes into your name or you're the guardian over that those funds, we can utilize those as a part of your income. The next thing would be we can also use it with your W-2 income. So that allows for you to qualify for more. We can use disability. So if you're receiving Social Security and disability, and the disability is likely to continue over the course of 3 years, then we can utilize that income to qualify you for a mortgage as well. If you receive some type of alimony payment, again, if it's able to continue for at least 3 years, we have the ability to utilize that as qualifying income for you. Now, when utilizing these incomes, you need to make sure that you have the proper documentation. For the alimony, we'll need um, for alimony, we will need a divorce decree and the paperwork saying how much you receive and for how long you will be receiving the alimony. Actually, I'm gonna go ahead and take your question. How you doing, Miss Margaret Tate? It says, can a business owner with losses purchase a home without having to put down 20%? And what would the credit criteria be? So the answer is yes. A business owner who has losses can purchase a home without having to put down 20%. Um, Now, if you have a business and you made $100,000 and you show that you only made 50,000, even though that's losses, that's the income that we're going to utilize. We're going to utilize the $50,000, and let's say your debt to income ratio checks all the boxes and we can qualify you. Well, then that income allows for you to qualify for your traditional FHA, for VA if you're a veteran, for conventional financing, or USDA. So because you're self-employed and you took some losses doesn't necessarily mean that you don't qualify. But it just like even if you were a W-2 employee, you have to show more and that you can manage a mortgage along with your current debts. Now, let me give you another scenario, Ms. Margaret, to make sure I answer your question correctly. If you made $100,000 on paper, but on your tax returns, it shows that you lost 102,000. So then you're negative 2,000. Then you're not going to get a traditional FHA, VA, USDA, or conventional. You do have an option to do something called a bank statement loan, where we utilize the deposits from your bank statements that are business related. You have to be in business or running your business for at least 2 years. And we have to have at least 12 or 24 months of bank statements where we can calculate the deposits. In most cases, at the time of this recording, the lowest bank statement loan is 15% down. But depending on your score. It could be 20, but it's a way around putting, not getting a home, right? So I always tell business owners, you're going to spend your money on something. You're either going to show more income on your taxes and pay the IRS, or you're going to show no income on your taxes and then put down a larger deposit on the house. But those funds are going to go somewhere, whether it's to Uncle Sam or as a down payment on your property. Do you know about how long it takes to get a plan from the IRS as a business owner who owes taxes? Wow. Great question. Currently going through this situation now with a potential client. So long story short is if it's 2022 and you owe back taxes, then your taxes, oh, if you owe taxes, the taxes are technically not due until after April the 15th of this year. Now, if you owe back taxes, what you need to do is to reach out to the IRS. Reach out to the IRS and tell them you'd like to get on a payment plan for your back taxes. You will talk to them, you'll give them some information. They'll come up with a formula and ask you, Mr. or Mrs. Such and so, can you afford to pay, let's say, $700 a month? By doing that, then typically it takes about 45 days for them to have you enter into the paperwork. So they'll send you an agreement. They'll send you something to go online and to get that set up. However, making the payments, you are responsible for paying them. And typically they're paid online and they keep track of it. If you're looking to purchase a home and those tax liens are not a judgment, or excuse me, taxes are not a judgment or a lien, you just need to have the payment arrangement set up. If it's a judgment or a lien, then you need to make 3 on-time payments, no missed payments, before you can purchase a home. Hopefully that answers your question. I receive SSI for my grown dependent son. The last lender wouldn't accept that income because they said I had to be his official guardian. That is true. You do need to be his official guardian. It may be a little bit more to it. I'm not sure how deep you can get into it, but I will say a way around that is to potentially add your son to the loan, and then you can use the income because he's on the loan and it's his income. Miss Margaret has another question. She says, "This is great to know. What about investment properties? Can I get a loan towards that?" Yes, you can get a loan towards investment properties. It works very similar, except on investment properties, they're typically going to want a stronger credit score. But if you're a business owner and you're looking to buy a property, and you have the funds for down payment and closing costs, you can get a loan if you qualify based off the income you're showing. Um, so, if you guys are listening and you have questions, put them in the chat. I would love to answer any questions that you have. No question is crazy or stupid. I'm here to answer your questions. Yeah, I would reach out to the IRS myself. CPAs, that right now this is their busy season, so the likelihood of them having extra time to reach out to the IRS is going to be slim to none, at least until after April 15th. There's a small window they may have, and then for the taxes that are due October the 15th, so they don't have a large window of additional time to call. They may have great intentions, but I would say instead of waiting for them and it delaying your process, to reach out to the IRS. If your taxes have been processed, they can pull up what you owe, and then they can guide you as to how to log into the system to see it. And then you can discuss with the person on the phone your payment arrangement. Do, 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 do. Can the income from his second job along with his first qualify? Great question. So, in order to qualify, use 2 jobs or 2 incomes, you have to be working both jobs simultaneously for at least 2 years. Example, if I work at Microsoft and I've been there for 3 years and I've been at Google for 2, then I can use those 2 incomes, right? If I work at Microsoft and I've been there for 3 years, but I've only been at Google for 1, then in order to count that second income, I have to wait until I've been at Google for 2 years. The reason why they do that is so people don't go and get jobs just to qualify. And they also want to make sure that the largest payment that you'll have is a mortgage payment. So they want to make sure you adding on this additional debt and it being on your credit, are you able to maintain your lifestyle along with adding this additional debt? Because some people don't have rent, Some go from college to a mortgage, or their mortgage is higher than their rent. So they want to make sure that you are a qualified buyer to take on this additional risk. Because even though you put down 5, 10, 3.5%, the lender has more vested into this because they're giving majority of the money. So they want to make sure the lenders don't want properties. They want the money from the properties, the payments. So they want to make sure that they're not going to get this property back. But the person would need to be on both jobs for 2 years. And just to clarify, it doesn't matter if it's same industry, doesn't matter if he leaves that second job and goes to another job in that same industry. It has to be the same 2 jobs consecutively for 2 years. I have no debt, an 800 credit score, making 60K. Can I get a $350,000 home? I've been on my job just 2 years. Based off the information that you've provided, it looks like you may be able to qualify for a home for 350,000. However, some people say they have no debt and they don't take in consideration the student loans. If you don't have student loans and you really don't have any debt, it's possible that you could qualify for a home around 350, depending on your location. If taxes are super high, like in New Jersey or New York or South Carolina, somewhere like that, it may be a little stretch. The best thing I would tell you to do is to apply with the lender, preferably me, but if not, apply with a lender and then kind of see what you can qualify for, because it's going to be easier for him or her to tell you what you can qualify for by having the file in front of them. It says also, I previously sold my house and have a 30K dental payment. I think that's dental payment. Not sure what that means. If you can clarify it for me, I could probably answer it a little better. Cynthia Tucker. I also couldn't use my self-employment income because 2021 was lower than 2020. I didn't understand why the years couldn't be averaged and they wouldn't use my 2022 income, even though I did a profit and loss. So you should be able to utilize your self-employment income. Each lender is different, right? Each lender is different. They all have a different set of guidelines that they could potentially go by. And for the purposes of this live, I can only speak of the guidelines and what my company definitely goes by. But I'd be willing to take a look at it. If there's a significant drop in income for 2021 and you have a legitimate reason, then we could probably do something called letter of explanation and let them know. Worst case scenario, if you got your profit and loss statement for 2022 and you really want to get a house, I would go ahead and file my taxes so that income is higher, and then they'll average the 2 years. They'll average the 2 years, 20 and 2021. And if 21 and 22, if 22's income is higher, it's going to bring up 2021 and allow for you to qualify for a little bit more. Cole, Denise, thank you. Miss Margaret, thank you as well. Oh, you said you got 30K down payment. Oh, that should be a no-brainer. That should be a no-brainer in terms of the down payment. I definitely would say you may not have to put all 30% down the down payment. It's potentially ways that you could utilize that same money and it be more beneficial to you than going as a $30,000 down payment. Any other questions? I appreciate you guys for tapping in. This is my first live on my YouTube page. Appreciate you guys for showing up. Do me a huge favor. I plan on going live once a week in March, and I'm going to go live a little bit more frequently. If you're on here and you're not subscribed, do me a huge favor and hit the subscribe button. If you think that this information is impertinent, leave me some comments below or send this out to a couple of people who you think it could be beneficial to. You also have the opportunity at the end of this live, my contact information to be at the bottom. And if you have a question that you don't want to ask on here because it's a little bit more personal, I am open for consultations. Could I get down payment assistance program having had a previous home? Yes. There are some down payment assistance programs that are not geared towards just first time home buyers. So there's down payment assistance programs that are geared to first time home buyers, which are first time home buyer programs. And then there are down payment assistance programs that are available to people who have potentially owned a home before. It's just down payment assistance. So to answer your question, it is yes. Depending on what programs you're looking at, there could be something. I have two national down payment assistance programs that would work, and they're not asset based, meaning that 30K that you have available, most likely your state down payment assistance program won't accept you because you have too many assets. Hopefully that answers your question. CHM, thank you. And I appreciate Shahida Hill. Cynthia Tucker, how are zero balance credit cards counted as related to DTI? So if you don't have a bank a payment, then we don't look at it. Example: if you had $1,000 balance and your monthly payment was $50 a month, that's what we're going to use. So when it comes to DTI, we don't use the total debt. We look at how much is the monthly payment. So just remember, when you're talking mortgages, everything is really based on monthly. The debt to income ratio is monthly. Because you can have $1,000 credit card, $2,000 credit card balances, one have a $50 payment and one have a $75 payment, because there's a difference in the interest payment, in the interest on those two cards. Do I know much about the 203K renovation loans? I do. I'm going to be honest with you guys. They are a great product to utilize. They are time consuming. So you may talk to a lender who may not be interested in doing it. I will do them. You also will potentially run into some contractors who are not interested in 203K. And I'll tell you why. Simply because the contractor gets funds the draw. So at closing, let's say the renovations are $100,000, and let's say they get $25,000 to start, but it costs 50 to do. Then they have to float the payments or the bill until they're issued a draw, which happens after they've done the work. We utilize FHA does that to protect the consumer and us, because what you don't want is for a contractor to get $50,000 and then drag their feet and drag out your process. And you also don't want them to have all the money and to run off with your funds. So they get a small portion of each draw, and a draw is where, let's say, for instance, like we said, there's $100,000 in repairs. And of that $100,000, there's 5 draws. So in that 5 draws, that means there's $20,000 per draw. So instead of him getting the whole 50 or 100, he or she, and there's some female contractors, they get $20,000 to do the work, and then they don't get their other $20,000 until the other work after that is completed and it's been inspected by an appraiser and a HUD inspector. But a 203K is a great way to purchase the ugliest house in a nice neighborhood, or to even do renovations on a current home that you have and build equity into it. So it's a great product. We also can do conventional home style, which is a renovation loan by Fannie Mae. How can a co-signer help with approval with DTI? So a in mortgages is called a co-borrower. So what they do is, to help with DTI, they just have to be able to have more income or less debt than you. So example, if your debt to income ratio is at 57 and you want to add a spouse or a family member to the loan, their debt to income ratio needs to be lower than that. So let's say you added your mother, and you add your mom, and she gets $1,500 in Social Security, but she doesn't have any bills that report on her credit, then that's going to benefit you because she has low debt. So if you're looking for someone who's a co-borrower, you want to make sure that they have low debt, a good credit score, or at least a qualifying credit score, and they have the income. Hopefully that answers your question, but they can help you qualify for more as long as their debts are low. In Dallas, there are so many homes on the market that are entering the 900K. Worst homes are at 400K. How would you suggest to approach the bid as a real estate using 203K loan? I would say first get pre-approved, because you may not qualify for either one. And that's just being honest. You want to make sure that you qualify in that price range. And let's be clear, guys. What you qualify and are eligible for and what you can afford are two different things. So if you qualify for a $400,000 house, and let's say example, the payment was $3,500, but you only wanted to pay $2,500 in a mortgage payment, then you're not going to get a $400,000 house. If you can qualify for 900,000 and a house that needs work, starting in the $400,000 range, then I would look at that property and have a couple contractors give you bids on exactly what you want, and then start the process from there. Building equity into your home, buying it for a little less, and then creating some of your vision. It's not all yours because the house was constructed, but creating your vision would definitely help in the process. But yeah, Texas is prices in Texas are definitely going up. So the renovation loan by Fannie Mae is what ratio, and is it based on market or ARV? So any renovation loan, let's say you qualify for 500,000, and that means that the house that you purchase, along with the renovations that you're going to do, cannot exceed $500,000. Let's say you found the house, you have identified a house, and you've got a contractor to go out and to do an estimate, and you decide to take that estimate and you want to move forward. You then give that information to us, and you will hire a HUD consultant. A HUD consultant makes sure that the contractor isn't skimping on anything, or that he or she is not overcharging you for anything, and also making sure that the renovations, the way that you want them done, that he or she are adding everything that's needed. Because again, they're a liaison for us as the lender and you as the buyer to make sure you don't get taken advantage of. Once that's done, we get the sales contract, and let's say the house is 250, renovations is 250. Then we start the process. We give the contract and the renovation repair list to an appraiser. He or she appraises the house as if the work is complete. Now, when they do that, if the property comes back and appraises for at least 500,000 or more, you're good to go. If it comes back at 475, then one or two things need to happen. You either go back and adjust your renovations with the contractor, or you can go back to the seller and try to do a reduction in price. Or you could do a combination of the both to make the numbers work. But on a renovation loan, they're only going to lend you what the house appraises for, or after repair value. Cole Denise. Lately, I've been hearing just buy now and refi when rates go down. I want to know what you think about getting a 40-year loan and refinance to 25 when rates go down, or if they go down. So yeah, what we're going to run into is if the rates go down, a lot of people on the sidelines right now. If interest rates go down, then we're going to see more people coming off the bench getting into the real estate game again. What that's going to do is increase the demand for housing, and then it's going to become a seller's market again. What you can do is buy a house now, go with the higher rate if you qualify and if you're comfortable with the payment, and do a rate and term refinance once rates go down. So you're using rate and term, you're pretty much only they're going to look at your pay history. They're not going to look at your income. They're not going to do an appraisal. They're just going to make sure you've been paying on time for the last 12 months. If the rate's lower, do a rate and term refinance, and boom, you've got a lower interest rate. There aren't many 40-year programs out. They started to come out, but I would probably look at a 30-year with the rate, and then refinance when interest rates go down. And when you refinance, not necessarily go into a 25-year. What I would do is when you refinance, or a period when you're buying a house, is to pay one additional payment every year. So you pay your normal 12 payments. You call your lender and servicer and say, hey, I'd like to pay one additional payment, and I would like the entire payment to go to principal. By doing that, that knocks off 6.5 years of you paying back. So it pays down the principal. You're not paying as much interest, and it saves you money on interest that you would be paying on the home. I'm in Texas. Do you think it's a good time to buy? I get this question all the time. I think the best time to buy is when you qualify. Um, right now, I think we're in a great window. Rates have come down some. They've shifted a little bit in the last 3 weeks, but right now, sellers are looking to get to their destination. They're not getting multiple offers as they were before, or people paying way over. So right now is a good time to get some seller's concession, so you don't necessarily always have to come to the table with all of your down payment and closing costs. But I do think that it's a good time to buy as long as you can afford, because some people are waiting to say, okay, if the market crash, who knows what lending practices are going to be. And if the market crash, who says that you're going to continue to have a job? Hopefully that answered your question. And hey guys, this makes a guy feel special. I appreciate you guys taking your time out on a Wednesday evening to come talk to me, answer any of your questions, spend some time with me. I definitely appreciate you coming out and listening. I'm here, answer away. Can you give some information about assumable mortgages? I can give a little bit. I don't do them. So what an assumable mortgage is, let's say someone purchased a home in 2021. Their interest rate is 3.5%, and you'd like to buy their house. So if they owe 300,000 on their house, but the house is worth 500,000, what you can do is assume their mortgage from them through their mortgage company and get the house for the 3.5%. What they're not telling you is you're going to be paying $300,000 on the house, but you have to come up with that $200,000 to make the seller whole, because that's their profit. So you can get the lower interest rate, but the seller needs to walk away with his or her profit that they're looking for. So it's possible, but you just have to have money to buy out the seller with whatever equity they have in the property. You're welcome. Um, if you want to get a home in March, when do you recommend I start the pre-approval process? Today, because you want to make sure you're in position to purchase. So if you get pre-approved, and if you apply an application, you fill out an application, and let's say best case scenario, you get pre-approved and you can move forward. We're already at almost, it was 6 days left in February. So you've got 31 days in March. So then you have to go out and start looking in March. So if you're looking to buy in March, you need to get pre-approved today. No problem. CHM. I appreciate it. Appreciate it. Appreciate it. No problem. Casey Johnson. I appreciate you for hopping on as well. Um, no problem. No problem. Cole Denise. You're welcome. You're welcome. Oh, 2024. I would still apply now because you don't know what could be on your credit that could hinder you from being able to purchase. It could be a lien or a judgment that you took care of and it just wasn't satisfied, and you don't want to wait until the last minute to get it taken off. Creditors are just like everybody else. Once they get their money, they don't finish all the steps all the time. I see a lot of times where people have judgments or liens or IRS liens that were filed with the county, and they have not they've been paid, and you have receipt that they've been paid, but they haven't been released or satisfied in the courts. So then when we pull credit in consumer reports, it shows that you have a judgment or a lien. But that's easy solve. If you have the paperwork showing that you paid, you just reach out to that municipality or courthouse, show it to them, and they'll release it, and then just get an updated document. All right. Can those additional funds be added to the loan? That's a good question. I don't have the answer to that. I don't know. But you know what? I'm going to see if I can find out. Not this second, but that's a good question to know. You want to buy in November and you hear that pre-approval letters last for 90 days. If I don't find a home in that time frame, do I have to start all over? Not necessarily starting all over. If it goes beyond 120 days, that's how good the credit report is. You're always going to be updating your information. So what you're going to essentially do is get your credit pulled, update your pay stubs and bank statements, and then you'll be good to go. But that happens in the process anyway. Just to give you guys a heads up, when you're applying, even though you feel like you've already given your lender the information, depending on how long you're in the process, they're always going to want updated pay stubs and bank statements because they need to make sure you're still working, you still have the same qualifying income, and you still have the funds to close. Cynthia Turner, I thought there was a rule that borrowers no longer have to close credit cards to avoid having a monthly payment. So having a zero balance and closing your credit cards are two different things. So having a zero balance means I've got a $5,000 limit, but I haven't charged the card. Closing the card is I had a $5,000 limit and I told American Express to cancel my card. If you cancel your card, that typically has a negative effect on your credit. So if you don't want to use your credit card, either hide it from yourself or cut it up and just leave that trade line open so you don't affect your credit. Even if no payments are reported, they have to be counted. Nah, if you got a $5,000 credit limit and you're not charging, what's being counted? So no, that's not true. Um, Now paying them off, it'll help because even though let's say your monthly payment on those credit cards are 75 bucks, that gives you $75 more of buying power for the house. And it says, so are you saying paying off the credit cards won't matter? If you pay them to a zero balance, yes, it matters. Then you no longer have a monthly payment counted into your debt to income ratio for those cards, which means that $75 that we just used as an example will go towards you qualifying for more house. $75 a month worth more. That's about eight to $10,000 more. Are you saying paying off my credit cards won't matter regarding DTI? It will your DTI will be lower because you no longer have that payment. So, example, paying off your credit cards and having a zero balance takes away, it lowers your debt to income ratio because you no longer have that monthly payment from your credit cards into your debt. And then there's nothing that we add on the application or into your DTI because you don't have a credit card payment. Because sometimes people have credit card bills or payments and we get them to pay them off so they can qualify for the house they want, or even just qualify, period. We also do it to help them, increase their credit score. So there's different ways that we utilize it. So to answer your question, it does affect your DTI. If there's no payment, then there's nothing to add into the DTI. If there is a payment, we take that monthly payment and add it into the DTI. And for those of you listening wondering what DTI is, it's debt to income ratio. Um, an income that I haven't talked about that you can utilize, just to make sure I get this in the conversation, is child support. If you are receiving child support and you want to use it, you can utilize child support as a qualifying income. Now, let me be clear. With child support, they have to be current and it has to likely continue for 3 years. So if your child is 14 years old and they receive child support, then we can utilize it. If they're 15 and a day, then it's not likely to continue for 3 years. Some people have child support orders where it continues, and if the child goes to college and you say my son or daughter is going to college, I've never seen that work, because when they graduate, they're an adult and you have no way of knowing if they're going to college or if they're going into the workforce or if they're going to the military. So it pretty much stops. So if your child is 15 years old or 15 years in a day, we're not going to be able to use that child support. Now, if you get child support for multiple kids, then we look at the breakdown of the kids that do qualify in that income and we can utilize that. It has to be current and on time. And if it is in arrears, we have to see a payment history that he or she has been paying on time over a specific allotted amount of time. I think it's maybe 6 or 9 months straight. So you really, you could buy a house without really having a job, right? You can use your social security and your disability. You can also use your child support. In some cases, I've seen where parents get social security, their minor gets social security, and you can utilize those incomes to qualify for a house. Um, no matter what your age is, as long as you are old enough to enter into a contract, you can be 75. And if you decide you want to buy your first home with your social security, pension, or disability, you can, which leads to another thing. Income is you can use your pension income. You can use pension income to qualify just like any other income. So, you know, just remember, can I use an income? If it's a second job or a third job, have I been working this job for at least 2 years simultaneously with the other job? If it's income and you receive it, am I likely to continue receiving this income for 3 years or not? And it doesn't matter how long you've received it. If you get awarded your social security and you have your awards letter to go along with a job that you have, we can utilize that as qualifying income. If you're getting child support, once the child support court order, if it's court ordered, if the child support payment has been made, we can use that. Disability, VA disability, like we can use all that as long as we can provide an awards letter, and it does not have to be a 2-year previous history, but it has to continue for at least 3. Um, Cynthia, I appreciate you. You got a lot of questions for me. Appreciate it. Appreciate it. Um, I have a part-time job that I've had for 10 years, but I only work for them a few months out of the year. Do I need to actually be on that job to qualify, or can I provide a 2-year history? So if you're working at that part-time job, and you work sporadically, as long as you have a history of working there and still employed when we do the verification of employment, or you'll hear lenders say VOE, that's verification of employment, we'll just take that time and average it out over the course of the year. Like, you may not work much during the first part of the year, but then you pick up during the summertime and the holidays. We'll just average that over the course of the 12 months. We'll also do the verification of employment to say, Cynthia is working and she works 20 hours a week and she gets paid $20 an hour. And then as long as those two numbers go together or it makes sense, then we can verify it, then that's the qualifying income we use. Now this is important. Bonus income. We can use bonus income even if you only get bonus once a year. You have to have a 2-year history of receiving bonuses. We take the bonus, let's say from 2021 and 2022, and we average it over the course of 24 months. Remember, in mortgages, everything is considered on a monthly basis. That's what we're looking at when it comes to income. So we're going to average it over the course of 24 months. Let's say you get commission. You need a 2-year history. A 2-year history of receiving commission. Again, we average that commission over the course of 2 years to make sure that you have a 2-year history. Let's say you say, Kevin, I get bonuses and commission. We can utilize that as well. We average the bonuses for the bonus income and the commission as well. Well, Kevin, how about overtime? Yep, we can use overtime. You need a 2-year history of receiving overtime, and we average it over the course of the year. For nurses, shift differential, per diem, we can utilize all of that. You just have to have a history. Let's say you worked overtime at Walmart, and now you work at Target or Target, and you got overtime at Walmart, and now you get overtime at Target. We can utilize that because we can prove you have a 2-year history. We just get some additional documentation to see what you made at Walmart, and then we get documentation to see what you make at Target, and we average those across the board. So you can use, income from overtime. I've seen people qualify on their mortgage using regular pay, bonuses, commission, overtime, shift differential. Like, whatever income, as long as they have a 2-year history, they can qualify. Alex Max, how are mortgages calculated for 2 people applying together? Whose credit do they use? So as a rule of thumb, you'll hear something called the middle score. The middle score is, so let's say you've got 3 credit agencies: Experian, TransUnion, Equifax. Experian is the middle score. So let's say Experian is 640, Equifax is 650, and TransUnion 630. But your wife or spouse's is TransUnion, and theirs is 650, and the other scores, one's higher, one's lower. We go at the lowest of the 2 middle scores. So we're going to go at your 640 as a qualifying score. Now, something I will tell you, even though your score may be a little lower, the fact that you have a borrower on the application with you with a stronger, higher score also helps with you qualifying. That mid score helps with qualifying, and also helps with figuring out where your interest rate is going to be. In terms of applying, we calculate both people's incomes and both debts. Sometimes it works where both people can be on the loan because their debt to income ratio allows for them to qualify. And then sometimes we have to take a borrower off because their debts are too high or they don't make enough income. So we're always going to look at to see, can you do it together? And if you can't, who's the stronger person to qualify for the mortgage? Desiree, if someone receives money that's a gift for a down payment on a home, is there paperwork required that needs to be sent to the lender? Yes. So the lender is going to ask you to have your donor fill out something on a gift letter. We provide you with the gift letter. So we're going to need the gift letter showing the funds. And we're also going to ask that person for a 30-day most recent pay bank statement. Most recent bank statement showing that they have the income in their account to gift to you. So they're going to fill out the document. They're going to put their bank number on there. They're going to put their bank, how much they're donating to you, who you are in a relationship with them, and then they're going to sign and you're going to sign. We're going to submit the bank statement along with that letter in the underwriting to make sure that it is a donor, that you can donate it, or you is someone who can donate it to you, and then we should be good to go. Um, Now it does affect. Sometimes I've seen with lower scores, if a person get a gift and then they're using down payment assistance or something, then the system doesn't like it. But for the most part, to answer your question, yes, you can get a gift for your down payment and or closing costs. If someone, um, I think it's Charlene, Carla. If I'm self-employed and worried about my AGI not being enough to qualify for a good DTI, is a bank statement loan a better idea than just paying more in taxes to due to less deductions? Um, Depends on what you would owe, and if you qualify. So if you make $50,000 in your business, it's not going to be a lot to do a bank statement loan. And then on the other side, you're not going to have a high tax bill, so you don't really need to write off a whole lot. But to answer your question, I would get I would, if I'm the lender, I'm going to run both scenarios when you come to me, and then I'm going to let you see and you decide which route you would like to take. If you haven't done your 2022 tax returns, I would use your qualifying income for 2021 and 2020, and then base it off of that. But there's a couple scenarios you can run for that. And then also with the bank statement loans, we would need 12 or 24 months of bank statements to calculate the income to see which one made more sense. It's two scenarios. It's work for the lender. It may take them a little longer because they're working on two processes, but it's an opportunity to see which one makes more sense for you. No problem, Alex, man. I appreciate you. I just did it. Depending on the lender, underwriting can take a minute. Yeah, underwriting can take a minute. Um, so let's look at it from this standpoint. Underwriting is the person who approves your loan. I gather your documents. I look at the loan. I run it to my AUS, which is automated underwriting system, to see if we can get an approval. If we can get an approval based off my knowledge base and what the system says, that's the first hurdle. The second hurdle is when it goes into underwriting, the underwriter's job is to comb through the loan and look over everything that we've provided and ask questions about something they have a question about. The reason why they do that is because they want to make sure that this is a sellable loan on the back end. So when you hear about mortgage companies, you started with ABC Mortgage and then your loan got sold to 123 Mortgage. That's because they brought it, and that allows for that mortgage company ABC to take that money and lend to someone else. Um, so yes, the underwriter has the final decision. They're not always 100% right. They see a lot of files, and sometimes we have to challenge the underwriter because they may not have seen the scenario. So underwriters make the final decision, but they're human and they make mistakes. So sometimes you have to show them, hey, this is what the guidelines say, so we should be able to do that. And the other good part is the underwriter taking their time, or letting you know what needs to be done. Then they doesn't all that mean they're going to deny the loan. They can say, hey, you need to provide me with an explanation of as to why this looks this way. Uh Do I think the CPI report in March will affect the rates? Not really. Um, I do know that the shelter inflation will affect the rates. Shelter inflation is how much you pay to live, utilities, food, water, housing. I, based off what I see, is I'm thinking towards the end of the year, we will see a dip in rates. Um, but as of right now, we definitely are going to see rates in probably the mid sixes to sevens. They may touch the fives by the end of the year. But just remember, if you wait until the end of the year, then you're going to be having more competition. And that's the biggest thing. You want to buy when you have an opportunity. And right now, sellers are willing to contribute to closing costs. They're not there's less competition right now, so you could wait for a lower rate. But what happens if the rate reduces and then the price of housing goes up? So that's something you have to weigh out. Thank you, thank you. I saw a question up there I didn't get a chance to answer. Um, oh, hey, I'm from Louisiana. Started following you, watching Shahida Hill. Thank you, Latoya. Thank you. I appreciate you. Thank you, guys. Hey, again, guys, if you're new, you just popped on, do me a huge favor. If you have not already subscribed, please subscribe to my channel. I plan on putting out more content. Shahida has challenged me to put out more content, so that's what I'm definitely going to do. I'm giving you insight from a lender standpoint, and I'm here to answer any questions that you have. Just remember that the answers are based off of guidelines that my company go by, and we typically don't have any overlays. Yep, gifting a family member. Yep. Um, Madden. Are pre-approvals fully underwritten? Um, you can get a pre-approval fully underwritten. It's usually called TBD, to be determined. And the to be determined is the address. So you could get your file, get all the documents together that the lender requires, and have them pre-approve you, and then submit it to underwriting. Excuse me, to submit it to underwriting. What happens is underwriting looks at your income and your credit, and they fully underwrite the file. The only thing missing is a sales contract and the appraisal. What that allows for you to do, it allows for you to close on your loan a little faster because you've got a lot of the guesswork out of the way. It also allows for, if you have a situation where you're not sure, or if your lender's not 100% sure if the underwriter will go for it, then you can submit it to them and they can kind of give us an idea whether, hey, we can do this or we may need to wait. Thank you. Thank you for subscribing through Shahida Hill. I appreciate you guys. Um, do me a favor, guys. Help a brother out. Let me know some other topics that you'd like for me to touch on my page, so I can have something to come back and you guys can listen to me. Also hit the notification button. Hit the notification button so you know when I'm going live. And if are interested, or like I said, if you have any questions about the mortgage process that you need answers to, you can drop them in the chat. My contact information will be below, and you can definitely reach out to me. Um, Miss Margaret Tate, I appreciate it. Keep buying. Keep buying, Miss Margaret. People are always going to need somewhere to live. No matter what the market is, guys, you're going to need somewhere to live. If interest rates are high, you're going to need somewhere to live. If interest rates are low, you're going to need somewhere to live. You always have to have somewhere to live, whether it's buying or renting. Is that a question? Malawalk, Malawi Lake 40. Are you asking, can you buy a home after going through a foreclosure? If that is a question, yes. You can. FHA has to be 3 years. Conventional, it has to be between 4 to 7. Charlene Carla, are there still programs that are not based on income or assets? I used to work in the industry in 2008, so I know a lot has changed. There are some based off of not based off of income. The difference between now and then is, back then you could have a 580 credit score and get 100% financing, no docs, right? Now they still have those programs, but they want two things that differently now. They would like to have a higher credit score and more of a down payment from that person based off their credit score. So the days of, no docs and low credit score and no down payment are gone. However, there are no doc programs, but you need to have the score and a down payment as well. Because remember, the bank is taking a risk. Even if you put down 20, 25%, the bank is still putting down 75 to 80%. So they still have the most to lose in this scenario. No problem, Sweet P 100. I appreciate you. Good evening, Mr. Anthony Martin. Cool. Uh Mally Walk 40. Yep, definitely. Hey man, do me a favor. While you're waiting for the fall, go ahead and apply. Even if it's not with me, apply to make sure that's all you need to take care of. You want to make sure that you're still in position because you want to time it right. You want to make sure that your lease isn't at the end and then you got to scramble and get a rental because you waited till the last minute in order to qualify, and there was things on your credit that you wasn't aware of or couldn't or didn't realize were there because it might not even been you. What's going on, Anthony Martin from Chi-Town? Thank you, man. I appreciate it, man. Appreciate it. Regarding income verification, can I count that income during a month that I'm not at the job? Like I worked there March to May, but I apply in September. You have to be back working. So let's say we have some pay stubs from September, and that's fine because what we'll do is average the income out. So yes, you can count the income if you work from March to May, but you want to have some hours in September. You went through it. He gave me a date. Good job, brother. That's awesome. Awesome. Hey guys, apply. If you're looking to buy, I know Shahida and I give great information. There's other great lenders that give information, but the best way to know what you can do is by going ahead and apply. It's a cheat code. The lender can tell you what you potentially need to do to your credit. They can tell you what you may need to pay down to qualify for more. They may be able to tell you if you need to have a co-signer or a co-borrower. Um, you're definitely, apply. Don't worry about those 0 to 3 points on your credit report. That's going to come down because it's going to put you in position. If you don't have the credit score to qualify and you lose 3 points, doesn't matter because the goal is to get you where you do qualify. So you'll get those 0 to 3 points back. If it does affect your score, there's ways to get points back. So definitely don't let those points scare you or cost you an opportunity to purchase a home when it's the right time. Um, Sweet PB 100. I'm a nurse and have always had two jobs. I took a 10-month break from one job due to burnout, but now I'm back working too. Do I have to wait 2 years to qualify with both incomes? Short answer is yes. Um, Again, it could be a potential. It depends on if you're per diem at that job. So if you're per diem and you worked January and February, and didn't come back to the next January, they could, as long as you were still on payroll and then you were back working, they would probably just average that income. But it just depends on your work status with that company while you took the break. Hopefully that answers your question. Yes, we can. My team and I can help you in Florida, the great state of Florida. Yes, my team can help you in Louisiana as well. Hey guys, I can help you in 46 states, right? Forgive me because I don't know the 4 states we can't, other than I know we can't do New York, and I believe the other one's Rhode Island. We're working on getting New York. However, if you're in a state that I cannot lend in, I'm sure I have a lender partner that I can refer you to that will take great care of you. So definitely reach out. But yeah, 40, I can do Louisiana, I can do Texas, Florida, you name it, 46 different states. Cynthia, I only work there from March, so every year. So I use that income. I only apply while I'm there. What happens if I apply in March and I'm not there by closing? If we know that that's a seasonal job and you have a 24-month history of working there, listen to me. If it's seasonal and it has to be 24 months, which is different than 2 years. 2 years is 24 months. But when it's seasonal, if you work there let's see, March, April, May, 3 years at a time, 3 months at a time, you have to be there for at least 8 years if you only work those 3 months. So if that's been your history, as long as you've been there for 8 years and you're not there and it's considered a seasonal position, we can count that income. We will take that money that you've made, but we'd average it out over the course of 12 months. Will you need to be there in March? I don't think so. I think you just need to be on their payroll when we do the verification of employment. So, like again, like if it's seasonal, then we'll average it over time. Um, Let me see, guys. I'm going to give you the best email to reach out to me in the chat. Also, it will be at the bottom of the screen. Excuse me, it'll be at the bottom of this live. We'll definitely have my contact information there. Hey guys, I got time for like one or two more questions. I need to jump, but this has been great. This has been great. Minimum credit score for DPA. It varies. So I've got a national DPA where the minimum credit score is 600. Then I have one that's 620. I've got some that's 640. It just depends on the program that you want to use. I can help you in Illinois, Anthony Martin. I appreciate it, Cynthia. I appreciate it. The contact information will be down. Hey guys, this has been amazing. I appreciate you showing some love. I definitely appreciate it. If you have an additional question and you want to reach out to me, definitely grab a call or send me an email. My contact information be at the bottom. Again, if you're not subscribed, definitely subscribe to my channel and hit the notification button so you know when I'm going live or when I put out a new video. I try to put out a video once a week with informative information. And if I can't help you, I can put you in a direction of someone who can. I appreciate you guys for jumping on. I'm your guy, Kevin Jefferson, the People's Lender. Have a great day. And Riri, yes, I am licensed in Texas. We do it big in Texas. All right, guys, you have a great night.